The economy is in a technical recession. Let's get you the very latest now with our business anchor, Devin Mudigan. So, Devin, 2 quarters of negative growth, and here we are.
Yes, and that's exactly what it means, the technical recession that we referred to. If the economy contracts in 2 consecutive quarters, it brings us to this term, technical recession. Not great news. Let's follow the numbers that came out of Stats SA just minutes ago, and this is what it looks like. You'll remember this daunting figure of minus 2.2% growth in the first 3 months of the year. That number's been revised. We even grew at a more dismal rate, minus 2.6% from January to March this year. And then, of course, the big one, today's figure coming out for the second 3 months of the year, minus 0.7%. Analysts speaking ahead of this number said that the economy could have grown barely positive. They were expecting a number like 0.1 to 0.5%. That didn't happen. Instead, the economy actually contracted further, 0.7%. We understand that agriculture was the big number behind this. Of course, we had such a positive figure in agriculture last year or the previous quarters that in terms of the base effect, you see agriculture contributing very little. And of course, implications of a weak economy, pretty obvious. What happens here is that because the economy is contracting, the implications for job creation become dismal. And I must point out, Michelle, so if you have a situation like this, all the more reason why Cyril Ramaphosa, the president, has to be successful with that investment drive. The more money comes into the economy, the more active it gets. But then again, it brings another question. How do you convince investors to actually bring money into an economy that's shrinking? So it's not great news.
Well, that was my question to you, Devin. How do you do that? How does the president go out there and try to woo investment when we're seeing these types of dismal numbers?
Well, what the economists and analysts will tell you is that perhaps the presidency and the South African fraternity that's going on this mission to get the money in is to try and convince investors that perhaps the ground is fertile for investment. Hard to do when you have policies under debate. We look at the land expropriation laws as just and as socially just as those things could be. It is a deterrent for investment. The other thing is your strike activity in the country. When that escalates, investors tend to hold back. And of course, demand. If consumers are not buying and engage in business activity, of course, all the factories and all the retailers then also succumb to this very weakening trend that we are seeing at the moment. So it's a tough job for that investment quartet that Cyril Ramaphosa, the president, of course, actually put together in search for more investment. It's going to be a tough one. We'll give you more details now on exactly what made up this dismal figure of 0.7% growth in the second quarter on the decline. Michelle, back to you.
All right, thanks very much for that. Our business anchor, Devin Mudigan, bringing us some tough news, some devastating news. The economy in a technical recession after 2 consecutive quarters of negative growth. More on that.